Hello, guys. Good evening. Please give a quick confirmation if I'm audible. All right, great. All right, good evening once again, everyone, and welcome to our SBR post result batch for March 2025 session. So, today is a reset orientation for the first 30 minutes of our session, and after the 30 minutes, we'll have a regular fourth class, a regular fourth practice class for our regular batch. But of course, all of those who are here for the reset orientation can also sit and watch it as a demo session. Okay, what we'll end up doing is we'll end up cracking a full length exam style question, a 30-mark question, which is going to be on the groups. Your first 30-mark question, which is on groups, that will be cracked. Okay. So regular students, if you all want, you all can sit for the 30 minutes and still continue to watch the reset orientation. If you all want to take a break and come after 30 minutes, that's also fine. However, those who are there for reset orientation, of course, will sit for the next 30 minutes. Okay, so for all those who are not my students and are watching my session for the first time, just a quick brief introduction about myself. So my name is Aisha Faisal. I am a ACCA member and also I am a CPA Canada member, to be more precise, CPA Ontario member. Um, I am in the teaching industry for 10 years, specifically IFRS training. When I say IFRS, I mean the FR financial reporting and SBR training from 7 years now. FR has been mostly for 7 years, consistently every quarter, and SBR, I would say, from past 3 years now. And in this journey, I would say, yes, I've been fortunate to teach more than 3,000 students till date. Now, this is I would say, the teaching background, but I'm also part of corporates right now, and I have worked for the top 10 CA firms in Mumbai. And post that, I started working with KPMG. So, my corporate journey in India in a CA firm along with KPMG has been about 6 years. And now I am based in Kuwait, and in Kuwait, I'm working for one of the telecommunication companies here, which is Uridu, and I'm working over here as a SAP S4 HANA FI specialist. So I am from the architecture side where I help them with the um, architectural side of, I would say, the finance applications, that is accounts payables, accounts receivables, asset accounting, project systems, and so forth. Okay. Now, moving ahead. Now, the main thing, why are you guys here today, right? Why are the research students here today? One of the things you all want to understand is that what went wrong, right? What went wrong and what you should not do in the coming quarter again. Okay. So if my regular students are sitting in this batch, I would want you all to make benefit out of this as well, because of course, be proactive and not repeat these mistakes, right? What probably others have done. So I'm splitting these issues into two phases. One is the mistakes that you all are doing during the preparation phase, okay? And one is the mistakes that you all are doing during the exam phase. So of course, both needs to be avoided. Now, what you're doing wrong in the preparation phase. One, clearly, y'all are doing a FR style preparation. Some of the students are doing a FR style preparation, which means that when you read a concept, when you try to grasp a concept, for every concept that you see, mostly there's numerical, right? There are numericals. So, what you feel is that you understand the concept, you solve the numericals back and forth, and you're good, right? But that's not the case, because in SBR, FR style preparation won't work where you're just doing the numbers again and again. 60-70% of the paper is discursive, only 30% of the paper is numerical. So if you don't practice for that 60-70% paper how to write descriptive answers, it's a huge mistake. Not practicing on CBEPT platform, which means whatever is the portal that has been designed by ACCA body, where your past papers are there, where the mock papers are there, where the specimen papers are there. If you're not going to practice enough questions on this platform provided by the ACCA body, that's a problem. Why? Because so many times what is happening, y'all are coming from so many students are coming from the exemption route, and the first time that you see the look and feel of how the exam is going to be is on the exam date. which is a huge mistake. You should be familiar with the look and feel much prior, and not just familiar, you should have practiced on that screen enough. You know that only half of the screen space is available because on the half side there's question. The navigation also sometimes can get irritating and tricky, right? So you need to be very clear that how do you use the scroll bar, how do you shrink the size of the screen, how do you go to the next page, because so many times the concept that if you don't view the whole question and when you press next, it will send an error message that okay, you need to view the entire exhibit or something like that, right? Now if you're not familiar with all this on the exam day, you're just going to panic. You're just probably going to press next. It's not going to work. Time wasted, agitation, not being able to do the answer well, right? So not just familiar with the screen, but enough practice exploring of that space should be there. You should go solve groups, you should go solve ethics, you should go solve two amalgamation questions there. Okay, at least do this much. 100-mark paper, go solve on the platform. Not covering the whole syllabus. Yes, this is a problem because you all know that unlike any other course where so many times they will distribute the marks, right? That okay, the asset family will have 20 marks. Financial instruments and leases, two topics together will let's say have 10 marks for sure. So you know the ceiling, okay? So you know that, oh, okay, you know what? If I will let's say cover 70 to 80 marks of preparation, I know that I'll get anything between 50 to 60s at least. Okay, so for that, you would probably do a targeted studying of that 50 to 70 to 80 marks. Probably you will leave the 20 mark because you have the marks defined from which chapter how much is coming. But in the case of ACC, that's not the case. You do not have that marking scheme available for you. The only thing that you know is groups is 30 marks, yes, but in that also in groups, sub questions could be from other area, right? So your groups is 30 marks, okay. Ethics are 6 to 8 marks, fine. But there's nothing else that you know. There's nothing else that you know. Okay, so that's why not covering the whole syllabus becomes a problem because let's say you leave leases and go, and let's say the amalgamation question is completely on it. The 25-mark question is on leases. Then what do? You're in a soup because then what's happening is that you are trying to pass a paper out of 75 mark only. Rest 25 mark you don't know at all. So you're trying to get that 50 mark from the 75 mark paper. So that's why not covering the whole syllabus is a problem. Cherry picking is a problem. Okay. No plan to use time wisely. See, guys, if on day one, whenever you start, you're taking your study seriously, if you don't have a plan in hand, if you don't know how you're going to use the next 45 days, if you don't know how you're going to use the next 30 days, which day, what you're going to cover, it will become a problem because so many times we will end up procrastinating. Okay, this is something I'll do tomorrow. Then you still say you'll do tomorrow. Then you still say you'll do tomorrow. And then you know what you will have with you. You'll just have 1 week's time remaining with you. And then you'll try to learn like an entire mammoth syllabus in 1 week, which is not possible, right? So keep the plan in front of you, keep it right in front of your eye so that it gives you a guilt that, okay, if you're not covering today's part of the syllabus, after that, there are very less days because every day there is something dedicated to do. So when do you find the window to do it, right? When do you find? Let's say in your plan, keep buffer days also that, okay, if today you're skipping for whatever commitment, ad hoc commitment that has come, there is a buffer day to cover it. But again, you have only two buffer days. So how many days you can procrastinate? How many 2 days you can push? Like 2 days can you push? 1 day can you push? That visibility should be there in your hand right from day one. And again, let that guilt come in. When you see the plan and if you're missing something, you should have that guilt. If there's nothing in front of you, of course, there's no reminder. There's nothing bothering you. There's nothing pinching you. Of course, you're not going to open the books very easily, right? And end moment, you're going to panic. So doesn't help. Not having access to keynotes for quick revision all the time. Yeah, this is a problem I keep highlighting because, like, again, I said you have a giant syllabus, you have a mammoth syllabus. How do you remember it? After you have invested 4 hours of your life in understanding your IS 16 or 23, again, never you want to spend 4 hours to recall it. You probably want to spend 5 minutes or 10 minutes maximum for revision. You do not want to give more than that again. You watched a lecture today after 30 days. If I'll ask you anything from that lecture, you will not remember anything at all if you've not touched it in the coming 30 days at all. You'll not remember anything at all. So, of course, there needs to be a way that you can make the best use of those 4 hours invested till exam date. How is that possible? Revision. And revision with very minimum time. You have to have your pocket notes, cheat sheet, bird eye view notes, whatever you call it. You should have it. Let's say if you're not joining any course today, you're just there to understand the mistakes or whatever. Then please keep this. Please take this or take away. Prepare your own cheat sheets. Prepare your own keynotes, which is like a one glance note where everything is available on one sheet. Or if it's a like giant chapter like revenue or IFRS six, like your leases or like your financial instrument IFRS 9, then it could spread over 2 to 3 pages, but still they're like still much less like compared to a 30-40 page chapter. They're still there only on 3 sheets, right? And most of the topics are still going to fit in one sheet only. Leaving these 3 topics aside, I think most everything is fitting in your one sheet only. So you should have that kind of sheet available where you look at it for just 5 minutes and you've been able to do the revision. Then after 5 minutes, next revision is just going to take 3 minutes, and then 2 minutes, and then 1 minute. And there'll be a time when you just glance at the sheet and you'll be like, okay, I know everything about it. Like just 1 second is enough. It's all there in your head. Yeah, there'll be a time when you just look at it just for a second and you don't need more than a second to revise it. Okay. So yeah, this is a key, guys. This is a key during the preparation phase. Now, mistakes during the exam. What do? When you do a if FR style preparation, there's also a problem that you do a FR style attempt where you think that okay, you know what? Let me just do the numerical and come from the question, and that's enough. But so many questions, if you see, they are not even asking the numerical, they're just asking the discursive element. Then just doing the numerical from the whole paper will not touch the 50 mark band. Will not touch the 50 mark band because that much is not dedicated for numerical. That much is not dedicated. Whole paper not attempted. Okay, I would say that try your best. Try your best that you can attempt the whole paper. Okay. But let's say if there are very difficult questions, then don't sit and invest time in cracking those. Keep those questions for the last, okay? So, if there are difficult questions, you flag it, do it at the end, but try to key in something about it, like something relatable, like even just like a 1 or 2 sentences is enough. But try that every requirement you're able to key in something, okay? But let's say you know you're running short of time and there are questions you'll not be able to even touch, then keep these difficult questions for the last, and it's okay. Then don't touch them. Then don't touch them. In that case, it's fine. Okay. Now, what will happen? What will happen if your order is vice versa? Let's say if you have tried to do the difficult questions first and kept the easy questions for last. You're going to try to, crack the difficult question. You're going to try to, have some decent answer around it, invest time, invest time, invest time. And then there'll be a time when there's very little time for the easy questions. And you'll end up skipping easy questions as well. What will happen, you will be able to attempt only 80 mark of the paper, or let's say 70 mark of the paper. The problem is the 20 mark that you have left. If you kept the easy element for the last, then this is the easy sure mark that you lost. The sure mark that you lost. Okay. And that's not the wisest thing to do. What is wise to do? That the 20 mark paper that you had that you left, you couldn't attempt, is the most difficult element of your paper, is the most difficult element of the paper. This is the wisest thing to do. Why? Because even if you have left the paper, you can say that, oh, you know what? I missed on 20 mark of the paper because I was short of time. But any which ways, I didn't know that. I didn't know those questions. This is fine. Rather than saying, I left 20 mark of the paper and I knew it. I knew the answers. That's of course worse, right? So don't do this crime to yourself. This is something you're creating a problem for yourself if you are not having a strategy. Okay? Major problem. Leaving questions in continuity, OFR rule. So there is a concept in ACCA called own figure rule. So what happens is so many times you think that, oh, there is a numerical ask in requirement, question number two, or let's say question number three, the bit one is the requirement and which is numerical. And requirement two is asking you to explain those figures, explain those numbers. Okay. Or let's say some figure that you're going to get over here will again be used in requirement two. Okay. So now what you will be like, oh, you know what? I'm not sure about bit one. I think I could go wrong. So what's the point of even attempting bit two? because this is going to become entirely wrong. This I'll get, let's say, 0 out of 5. So of course the explanation for it is also going to be a 0 out of 4. What's the point? But this is a mistake that you're doing. Why? Because one, understand that even in this whole concept that you're trying to crack, if there is just one line which is wrong, you don't get a 0 out of 5. For that, every step there are marks. So you'll get a 4 out of 5, you'll get a 3 out of 5, but you won't get a 0 out of 5 if other things are correct. Okay? And even if the figure is wrong, but let's say if you start explaining that wrong figure, you can still absolutely have a 4 out of 4 mark if all your explanation basis the wrong figure is still correct. If all your explanation basis the wrong figure is still correct, you can still have a 4 out of 4 mark. Or let's say if you're even trying to crack a further numerical out of the first answer. For example, um in let's say, okay, in EPS, earnings per share, this is something that you will do at the towards the end of the syllabus, but earnings per share comes, you have a figure called profit for the year. Let's say profit for the year is a P&L figure, so one gets that figure after much calculation. So you'll be like, you know what, profit for the year figure is going to be wrong, so what's the point of cracking EPS, earnings per share formula, because it has profit for the year figure, which is for sure wrong, so EPS will also be wrong. So that's a problem, that's a mistake, because EPS will have its own step marks, and ACC will never penalize you twice for the same mistake. It will never penalize you twice for the same mistake. So even if your profit for the figure is wrong and your EPS does not match with the examiner's answer script, you can still get a full mark. You can still get a full mark if all your steps for EPS are correct. If all your steps for EPS are correct. Okay. So FR rule is an important rule. Then repeating comments is a problem. PAG is a comment that you can get from the examiner, which is a previously awarded grade comment. So try avoid to repeat any comments. Okay, try to pull maximum unique comments that you can. Overtime invested in sub questions. This I've already explained that do not try to have perfect answers. You might be like, oh, you know what? I know question number 3B really well. I can think through it and I can have the best answer here. Like I can develop, I can make a good answer here. And you're just putting in time, putting in time, putting in time. What's the purpose? That requirement 4B is, let's say, a 6 mark. Okay. And you have, let's say, invested good 30 minutes for it. Okay, it's not worth, because what you have done is, you've in an attempt to get a perfect 4 requirement 4B answer, you have risked so many marks of the paper, which could be easy marks. So you have risked your passing over getting a perfect answer, perfect sub answer. Your purpose is not to get a perfect sub answer. Your purpose is to get at least that 51 first, and then after that we can beautify, we can perfect answers, right? First is to get the 51 mark. So, of course, if you're over investing time in sub questions, thinking that you will have the perfect answer, it's not making sense. It's not even a point of discussion. You're not even going to talk to a friend or a tutor about it and say, you know what, wrote the best 4B answer compared to anyone. That's not even the purpose, right? What are we trying to achieve? You need to think, what are we trying to achieve? We're trying to first get the 51 mark and then marks beyond that. Then marks beyond that. Okay? Panicking for unique adjustments. So many times there'll be in the paper unique elements. Okay, I keep telling my students, so many times there'll be unique elements. Good 15 to 20 mark of the paper will be designed, which is not going to be of an average level, which is above average level. 5 to 10 mark is going to be extremely difficult. Like no one in the world will be able to do it. That's why it's not easy to see 100 out of 100 in SBR. If the paper was designed in such a manner that every question, every student can do it, then of course many students were going to get 100 out of 100. But if you see, no one in the world gets even 100 out of 100, which means that there is 7, 8, 10 marks designed that no one in the world can get it, literally. Like maybe one person in the world can still get it. Like if he's trying to do some like extra effort, read every part of the syllabus, maybe that person can get it. So anyway, that's what are we trying to again achieve? It has to be realistic. If you see a unique adjustment and if you panic, again, it's an unrealistic expectation from you that you will know everything of the paper. It's an unrealistic expectation. You will not know. Okay. So understand that if you're finding something difficult, majority of the class is mostly finding it difficult. You all are sailing in the same boat. Just navigate through it. Just pass through it. If you remember anything around that standard, key in those words, key in those numbers, move on from there, or keep it for the last, of course. Keep it for the last. Okay, so these are the few things that at any cost you all should avoid. Now for the students who are new, who wouldn't know how a cheat sheet should look like, or how should you make your own cheat sheet even if you're not joining the course. How should a cheat sheet look like? So you try to shrink and bring everything on one page. So IFRS 15, because it's a long topic, has like three such cheat sheets, or I think two. But yeah, this is the deal. You can see so many subtopics on the same page, so many subtopics on the same page. Then a 45-day plan that I want to share with you all how you could use it. Of course, this is a suggestive plan. If you want to do, if you want to use a different plan, of course, it's by all means, it's okay. Now, from January to February, what do you do? Okay. So, January, we are at the 17th today. If you have the time, please start with watching balance sheet. And balance sheet, PNL associates, these are all FR brought forward topics. So, one day you can dedicate for just watching these chapters and understanding by watching, not practice. I'm not expecting any practice here. There are students who have messaged asking for questions from balance sheet, PNL, and associates, like I think Pallister or something. But guys, this part of the syllabus is FR brought forward. So those questions printed form I'm not sharing with you all. These are just for demonstration purposes. I will never print FR questions for you all and share it in the kit. No, they are only FR questions and they are just for demonstration purposes for you to be able to recall what you did in FR. Okay, from here, your SBR specific syllabus starts, and this is a very important part of the syllabus, a very important part of the syllabus. Okay. Again, one day could be dedicated in understanding the concept, or you could change your plan. 20th, if you want try to understand change in group structure. Next day, dedicate again for change in group structure, question practice. Okay. Then Forex, and then dedicate again one full day for question practice of Forex. Or watch all the topics for day by day. And then in these buffer days that you have from 8th to 15th, right? 8 days. The 8 days that you have over here, do your question practice. Do your question practice. Okay. So yeah, this is your January month. This is how you would pass your January month. You would try to get control over groups. Full January month, you can try to get control over groups. But let's say if someone wanted to start with asset family and this part of the syllabus, which is the index, which is your index, I would say order, that's also fine. Why I'm trying to say start with groups first, because I do not want it to be really at the end of the syllabus or at the end of the course, because it's a little, not little, it's one of the most complex topics. Okay. So you wouldn't want to panic by touching this at the last. Okay. Now in February, what do we do? You start with asset family and you dedicate good first 6 days to asset family. Very easily you can finish asset family in the 6 days. Then you start with these individual topics of single entity, which is deferred tax, leases, financial instruments, employee benefits, revenue, share-based payments. Okay. Fair value. Then your small topics will start IAS 8 and 37, 10, related party. All of these will start. And finally, at the 21st of Feb to 28th of Feb, your revisions will start. Revision week. Heavy revisions. Your classes, your practice sessions are lighter, I would say, compared to the revision sessions. Revisions are very heavy, okay? So yeah, revisions will then start from 21st to 28th. Now, a quick overview of how we teach at Biffy. So you have recorded sessions, you have live sessions. What today you see is a live session. Recorded pretty much everything from a conceptual understanding point of view. You have everything recorded. Question practice also you have. If I've given a 36 question list, let's say good easily 33 to 32 questions are already pre-recorded. 3 to 4 from those question list I'll end up doing live, right? So you still have everything like 95% in hand. 95% in hand. There's nothing that keeps that for which you have to wait to understand and take a live session. Nothing at all. You have your e-notes, which are mainly the cheat sheets. And if you want to still bank on any notes for more detailed notes, you have to go to the study hub. That's our Bible study hub for any extra reading material. If you have time, of course, it's study hub. Then it's a TTA model, which means you have your assignments, you go to your portal, which the ACCA portal, the CBP portal practice there, and then you have your test yourself questions also on the portal. So you can make use of all of that. You have a 100-mark mock that I will check. You will also have a 50-mark mock, which I will not check, but we will have a debrief. Like I'll have one live session to just break it for you, break the paper for you. The 100-mark mock, I will of course check, meaning me only, not any assistant. I will check and I will also break the paper. I'll have a debrief session for that. Okay. Then we have a grand revision. And we have grand revisions. We're going to have 3 days of intensive revision sessions. And all this is going to get tracked from performance tracking, which is through a gamification model. What do we mean by this whole gamification model and performance tracking and everything? It means that whenever you do your things on time, whenever you attend the class on time, whenever you submit the assignment on time, you are getting points. And what's the deal with points? What do you do with the points? They will convert into a discount percentage for your next paper. So this is like a motivation to do things in a timely manner. Okay. Now, if you all have any questions, you all are free to message on this number, which is the support team's number. Even if you want to enroll or any other doubt if you have, yeah, you can always message him. Okay, so with this, we come to an end to the first session, the orientation session. Now we're going to move to a live practice session. So we'll just take like a 5-minute break. Just put 5 minutes on your stopwatch and let's come after 5 minutes, okay? Just come in 5 minutes, everyone. Okay? Yeah, Nasir?
Hi, Miss. How are you?
Yes, I'm fine. Thank you. Dear. How are you?
I'm good. I'm good. I just had a question. So I just joined your batch for the
Okay.
SBR. I just finished the SBL course and I just passed my exam, thankfully.
Oh,
And yeah, so I just wanted to know. Now I just finished IAS 16. I just finished your course yesterday, and now I have like a decent understanding of it, but I'm not sure how to practice it now. Like how would I practice it? And this goes for like all other topics.
correct.
Because in
So
SBL we had like a there's a way on how to answer like what happened, why happened, and the implications. Is it the same for SBR?
So mostly in SBR, what you can do is when I try to drill the questions or practice the questions for you all, it's mostly a state apply conclude concept because normally most of the students lack the style to have a form a descriptive style answer, right? So that's why I tell them to use this framework: state apply conclude, which means if you want to be very clear with how to achieve that mark which is offered by the examiner, or let's say it's a 6-mark requirement, then 2 mark you can easily state the standard and achieve. State means not saying that okay, IS 16 property, plant and equipment and you can get your 2 mark. No, you have to say IS 16 states that, and state what, because IS 16 talks about a lot of things. IS 16 says when to use IS 16, for what type of assets you have to use IS 16. IS 16 tells you the initial measurement. IS 16 tells you the subsequent measurement. IS 16 will talk about some exceptional rules. There are so many things IS 16 will tell you. How will you fetch that 2 mark to get that state part of the framework, right? So what you have to do is you have to only pick the relevant part. So in this scenario, there is something, let's say they're talking about initial measurement. Then you don't talk about what is an I-16 item. You talk about what I-16 says on initial measurement, that all costs incurred in bringing the asset to location and condition should be capitalized. This is what I-16 says. And let's say the scenario talks about dismantling cost. And dismantling cost should also be capitalized at present value. So talk this. So if you give these statements which are connected with the scenario, not random I-16 statements which are connected with the scenario, very easily you will get the mark which is therefore state part. Then applying these rules to the scenario, which is the application part of the framework: state, apply, and conclude. So, in application part of the framework, you have to be able to use that knowledge and crack. Okay, so let's say if you had to perform a numerical for dismantling, you had to be able to crack it and explain those numbers. So that's the application part. And a conclusion would be mostly just a 1 mark element. So if you want to conclude your answer, yes, there is that 1 mark available. But when I say this, it's not a very strict framework that if you don't do any, if you don't do this, you will not get the mark at all. It's a suggestive framework. Okay, it's a suggestive framework. So many times there are so many buffer marks that are offered by the examiner, that let's say if you just do the application of the standard and if you conclude it and close the answer, you still can get the 6 mark. Okay, why do I say this? Let me explain you why do I say this. Okay, what happens is, if you see the marking scheme of the examiner, let's say if there are 6 marks, so he can, if you see the breakup, 1 second. If you see the breakup of the marks, it will be like 3 marks of element they must have written for state. Then the applications they must have done, let's say, up to 5 marks. Okay, and let's say 2 marks they must have used for conclusion. Okay, so if you see, it was just a 6 mark requirement, but 5, 6, 7, almost 10 marks worth of answer they had developed. So if you just do the application and if you write enough quality points of 5 marks, and if you conclude with one statement also, you can get a 6 out of 6. That's why I say that this framework is not that rigid, but it is a suggestive framework that use this framework to make sure you're covered for all the marks. It's a suggestive framework. So yeah, this is the framework that we will use. I hope it's clear to you.
Yes, miss. And regarding the like the practicing of like each topic, because I noticed for IAS 16 there's one video about net, I believe, that you were
Yeah.
solving it. So would it be advisable to like attempt it after like watching each video, or should I just continue
Mm.
watching videos or like continue on to the next one? I think the next one's impairment.
No, I'll not recommend you that, of course. What you have to do is, the way you have to use these videos is that you have to watch the conceptual knowledge first. So you have understood what I-16 is, what the standard tells you about it. And then, of course, you have to go and either okay, so my guys, I'll do the 5 minute break afterwards, but yeah, let me just finish with this. So what you have to do is, after you watch I-16 conceptual knowledge, you have to go and either practice net first yourself and then recheck for the pre-recorded video, or watch the pre-recording and then still try to give one attempt by yourself. Now, why do I say this? Okay, there are students who are so tight with the schedule, they don't have the bandwidth to sit and practice every question. Okay, if that is the case, at least go watch it, at least go watch it. But of course, students who are like full-time students and who have the time will first solve it and then go watch the session, go watch the lecture on net. By no means, dear, just watch I-16, then move to I-23 and then 20 and then to 40. Don't do that. If you don't see how an exam style question will ever be tested, a SBR style question, you will not be able to, understand that what to pick when you're watching a session. Like when you're watching IS-23, what to pick or what to, keep in mind. Okay, there are principles that you need to actually memorize. Why? Because SBR style questions are like that you have to state, right? So if you only have visibility of what SBR style questions are, you would be able to pay attention in that manner. Okay. And why at start my questions are limited. Example, when you see I-16, maybe there's just one question net. Okay. Maybe if you see IFRS 16 leases, there'll be more questions. Why the questions are little? See, if you go and see the question pre-recorded list that I have provided, there are 36 questions which are full-length questions, not sub-questions. 36 full-length questions are there, okay? So if I want to like remove, let's say I-16 questions more from there, here and there, I can take an extract and put more in I-16, okay? But I know from student feedback for a fact that you all do not even have time to even watch the basic one question that I'm putting up there. That's why I'm not increasing the list so much. But if I get feedback that you all want more question numbers, like net is not enough, you all are saying, okay, we want three more such questions like that. Our next exercise would be to extract more such questions and put it up there. But we never got such feedback. What feedback we have is you all are short of time and you all are not able to do complete question practice. That's the feedback that we have till date. Okay,
All right, miss. Thank you so much.
no problem, no problem. Okay, guys, so now still we will take the 5 minute break and yeah, put 5 minutes on the stopwatch. Okay. All right, guys, please come back. We will begin the session now. All right, guys. So what I'll do right now is I'll share the sheet with you all because this is a SEBI EPT practice paper 1 question and it's a group's 30-mark question. I will share this Excel sheet with you all. Whoever is part of our regular class will have access to the sheet. Those who are just watching here as a reset orientation might not have it, but that's fine. Of course, you can go to the CBPT practice platform 1 and of course look at the question. And of course, while I'm tracking this question, parallelly I am demonstrating or I am showcasing the question that is printed as well, right? So it's okay. Even if you don't have the question right now, it's absolutely fine. Um, guys, go to the WhatsApp group and download this sheet that I'm sharing, okay? Go to your WhatsApp group and download it from there. I think this is one of the questions that the students had requested for. So yeah, you all will have it today. So this, for now, you can do it on the Excel sheet and preserve this. There is a certain set of questions that you all at your own pace, at your own time, if you want. Go, of course, not if you want, rather. You have to. A certain set of questions at least practice on the portal, right? So maybe not this, but any other question, yes. Okay. I hope everyone got the question. Is that the case or no? Did you all get the question? Yes or no? On the group. Okay, perfect. So we will begin now. We will not waste time. We will begin, okay? I'll increase the font. So what I have done is the background, exhibit 1, exhibit 2, exhibit 3, and the pre-populated and requirements. Everything I've kept on a separate tab for the ease. Okay, everything I've kept on a separate tab.
Ma'am, do we have to do parallelly as you are doing, or after the session we can practice by own?
It's really up to you if you have that speed that, okay, you can even listen and understand and parallelly do. By all means, do it. But if you think, no, you want to just focus and understand and practice later, no problem. Okay, because it's not that you all are submitting this sheet to me after the end of the session, nothing like that, right? It's okay, whatever approach. Now moving with this background, and once I'm done with the background, I'll read the requirements and then we'll start cracking the exhibits one by one. Okay. So yeah, to start with, just 1 second, guys. Because we had a half an hour delay, I am also struggling with the next class, which is like, really back to back. So just have to figure out something. How much time will take here? Yeah, fine. We'll manage this, no problem. Okay, so Chuckle Company is the parent of the Chuckle Group, It prepares its financial statements in accordance with IFRS accounting standards. The financial year end is the 31st March each year. So this is your year end. Okay. Now, why are we targeting a group company question? Because last to last week, you all did FR brought forward syllabus on groups. The last week, you all did SBR specific on groups, which is change in group structure. Okay, you all did change in group structure and foreign currency. So you all are in a position today to crack this. Is why I wanted to immediately take a groups question. The following exhibits available on the left hand side of the screen provide information relevant to the question. First, initial purchase provides information about the initial purchase of 30% of the equity shares of Grin Company. Second, subsequent purchase provides information about the subsequent purchase of 18% of the equity shares of Grin and the purchase of share options. Third, fair value of net assets provides information about the fair value of the net assets of Grin at 31st March 2026. Fourth, draft statement of profit of financial position. The draft consolidated statement of financial position of Chuckle Group as of 31st March 2026. So you have your four exhibits. The information should be used to answer the question requirements within your chosen response options. Fine. At this point of time, there is no pressure or no burden that you should remember what was in exhibit 1, 2, 3, 4. Nothing. You don't have to commit it to memory. It's okay. If you read it, just navigate through it. Really no need to read it twice as well. Okay, because when you read the exhibit, you have to put your focus on reading the exhibit one time, two times, three times if required. This, just navigate through it. Okay, after reading. Next, requirements. Okay. The first requirement. Using exhibit 1 only, justify why Grin should be classified as an associate and not a subsidiary on 31st March 20x4. So on this specific date, they're saying prove that, not prove rather, but justify that why he should be this company Grin should be an associate and not a subsidiary. Now, sometimes the mistake that students do over here is it's such an easy question to justify that why it's an associate, not a subsidiary, because they'll put points for you to pull and prove that it's an associate. They'll not put points why otherwise. Sometimes students go in the judging criteria and they say that, oh, you know what, let's judge whether this is an associate or subsidiary. And let's put our judgment that no, this is a subsidiary, not an associate. The deal is the question was never that. The question was never, the ball was never in your court that you had to decide whether it was an associate or subsidiary. It is already said it's an associate. You have to prove why it's an associate. That's the question. So you have to be really clear with the requirement. Otherwise, simply some easy marks because you did not read the question well, you will lose it. Okay. Simply easy marks, not read the question well, you will lose it. Okay. So we'll read the exhibit and justify why it's an associate. Now, this was your requirement A1. Okay. Now, requirement A2, using exhibit 1 only, they're still sticking to exhibit 1. Explain with calculation. So, explain has also come and calculations have also come. How Grin should be accounted for. How Grin should be accounted for in the consolidated statement of financial position of the Chuckle Group as at 31st March 20x6. So, at 31st March 20x4, why he's an associate and how his accounting should have been done with explanation at 31st March 20x6. This is the next task. Now, when you've read requirement A, I will highly recommend, no need to read all the requirements, maybe no need to enter into that kind of pressure. But yeah, once you've read at least one full requirement A, you need to read the last requirement to understand if requirement A is connected with the final requirement or not. What I'm trying to say here is every SBR group's question, this final requirement will be to go fix your pre-populated sheet. What is your pre-populated sheet? Already prepared consolidated statement of balance sheet, profit and loss statement, or cash flows. Either one of these three, okay? Balance sheet, profit and loss statement, or cash flows. It's already prepared. So that's why they say pre-populated, but it's there with mistakes. It's incomplete with errors, right? So the last requirement will be to correct it, okay? And mostly the last requirement will be taken, not more, like 99% of the times it will be the case that it will ask you to take all the mistakes of requirement A, B, C all into consideration and fix it in D. And fix it in D. So you have to understand if that linkage is there. If yes, if all those who have watched the last week's session sincerely will know what my approach is. When I'm cracking this 4 mark question, I will not just target this 4 mark. When I'm cracking this 3 mark question, I'll not just target this 3 mark. Whatever mistakes have been done, I will go and correct it. And I will not end up just getting my 7 mark here. I will, from this 12 mark, let's say, end up getting the 4 mark also for that correction. Or I don't know, maybe 3 mark is there for that correction. So I'll end up getting that also without wasting time. Okay, this is our approach. The second approach, normally, what students would do is they will do the first requirement, second, third, fourth, fifth, sixth. When they do the sixth requirement, they'll revisit all the exhibits to now go and make corrections. It's a sheer waste of time. When you understood what requirement A issues were, you knew at that point itself what to go and do in your pre-populated. At that point itself, it was just a matter of 1 or 2 seconds that you have to go pull those figures and put it in the pre-populated. That's it. It was just a matter of few seconds. If you defer this, if you delay this, and come to the final requirement and do this, you have forgotten all that you have done. Again, you will read the scenario, again, you read the exhibit, and then try to think, okay, this is the correction required in pre populated. Wrong approach. Absolutely wrong approach. Parallel approach is required. Every requirement, cater D also. With every requirement, cater the final requirement as well. Okay, and grab the marks then and there. This is the best approach to cater groups question. Okay. Now, they told me justify why Grin is an associate and not a subsidiary. Question should be very clear. They also want us to explain with calculation how Grin should be accounted for at the year end. Maybe cater one, maybe cater these two also parallel, up to you. How much ever you can retain. It's up to you. Mahira Khan's question is that how do we know that associate is already correct? How will we know this? Mehrakan, the requirement was that you have to go to the exhibit, and by reading the exhibit, you will know that why it's an associate. Not at that point when we read the requirement itself. You will not know, of course, at that point. Once you read the requirement, you will know why it's an associate, why that is correct. Okay. So I'll maybe change the color of the ink because this is like red is like too red. So anyway, on 31st March 20x4, the date on which they're asking me to prove that it's an associate, okay, on that date, Chuckle acquired 30% of the equity shares of Grin. Okay. Now, just by reading the first statement itself, just by just reading this first statement, what I have over here is the percentage. Is the percentage itself indicating that it's an associate, yes or no? Put it in the chat box or unmute your mic and tell me. Just the percentage itself is telling me it's an associate, yes or no? Yes, it is.
Yes,
30% is
associates.
an indicator of associate relationship. For associate relationship, what is the bracket of percentage? What is the bracket of percentage? 30 to 50%. Yes. No, not 30 to 50%. Sorry, not 30 to 50%. 20 to 50%. 20 to 50%. Okay. Yeah. 20 to 50% is your associate relationship. Now, in SBR, though life, even if percentages are there, life is not that simple because when you have a percentage, with that percentage, you also always have to read the additional information to make a conclusive statement, additional information to make a final judgment. And other than this statement, everything here now will act as a additional info. So you have to read the additional info and see that, oh, is it still supporting the fact that it's an associate, or they're saying, you know what, other than 30%, they have 50% more optional shares, which right now are exercisable. In that case, no, then 30% will not just prove that it's an associate because there is so much additional information which is telling me, no, 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 it is maybe a subsidiary, right? So by reading the first statement, yes, I can say that. Now let's read the further information. The consideration consisted of 100 million cash. The carrying amount of the net assets of Grin on 31st March 20x4 in its individual financial statements was 286 million, which was the same as the fair value. So the date that they acquired the associate, okay, the net worth of that associate was 286, or the carrying value of that net assets was 286 million at the date when they took it over as an associate. Now, since then, Grin has been stated at cost in consolidated financial statements of the Chuckle Group. Now, think and tell me that if if this is an associate, because they're telling us prove it's an associate, and if it's an associate, then this sentence that Grin has been stated at cost in the consolidated financial statements, not single entity, in the consolidated, is this right or wrong? Is this correct or wrong that it is stated at cost? Wrong, because what kind of accounting needs to be done if it's an associate? If it's an associate, what type of accounting needs to be done? Equity accounting. Absolutely correct. You need to do equity accounting. The second requirement was also around how would you account at it for the year end, the pre-populated dates year end. They also had asked us that how would you account for it, right? So I already know that they have done wrong accounting. I already know that they have done wrong accounting. So what I can do is I can start correcting it as well. Though my first requirement, A1, is to prove why it's an associate. Why an associate? You want, you can write a very short question over here so that you remember the agenda of the question. Okay. Now, A2, I had to do the calculations that what will the value of it be at 31st March. So, associate at 31st March 20x6, right? This was the second ask. If we may go back to the requirement, it said that using Exhibit 1, explain with calculations how should the grin be accounted for in the CSFP at the of the Chuckle Group at 31st March 20x6. Why I'm saying grin is an associate? Because they're straight away asking me to prove that it's an associate, right? So that's why I'm very easily able to say this. Okay. So the name is grin. So we will stick to using grin rather than maybe associate. You want, you can use grin, or you can even use the word associate, no problem. You know that when you have to do equity accounting, your starting point is still investment at cost, right? Investment at cost. That's your starting point. So here I'll put investment at cost. Can you all tell me how much should I put over here? How much should I put? What was my purchase price? What was my cost? How much should I put? 100 million. Very good. 100 million. Now, next is how do you do equity accounting if it's an associate? When you purchase it at cost, that cost price in the balance sheet will keep increasing. It will keep increasing. Why? Because associate is earning some profits, right? So that cost will increase because of the profits. How do I find what those profits are? Either it's a ready-made figure given to me, or I have comparison of the net worth. I have comparison of the net worth of that associate at acquisition date, and maybe the date when they're asking me the figures. So I this date's net worth I should have, and at acquisition date. When I compare the two, I'll get the profit earned. I'll get the profit earned by associate. And I'll simply take 30% of that. I'll simply take 30% of that. Okay. So hang on. We'll come to that. Okay. Now, from this paragraph, whatever information I could take numerically, I have started. One information that I can very easily take to prove why it's an associate is 30%. But I'm holding my horse. I am still, like, well, let's wait. Let's gather more proof to say why it's an associate. And then I'll quickly put all the points. Okay. This is my style for now. If you want, you can already use this piece of information and write one point that why he's an associate. Up to you. Okay. Now, the remaining 70% of the equity of Grin at 31st March was owned by a few other investors. A few other investors, none of which owned more than 10% of the equity of Grin. Okay. So we know that the remaining ownership is pretty much fragmented among the remaining shareholders, okay, at 31st March 20x4. Analysis shows that all shareholders have voted independently in the past. There has been no clear past voting pattern suggesting that Chuckle is unable to directly influence the economic decisions of other investors. Okay. Now look at the statement, what they're saying. There has been no clear past voting pattern suggesting that Chuckle is unable to directly influence the economic decisions of other investors. Chuckle and Grin share same key management personnel. Now, one of the key of the entity being an associate is, yeah, one is the 30% and other is what? What is the key term that they use to say that, okay, opposite organization is an associate? Yes, Susan is absolutely right. They use the word significant influence. And they're saying there is no proof or no voting pattern which suggests that they did not have. That they did not have. So, which means they had a significant influence. Okay. There was nobody who was able to break their significant influence. So, it does meet associates percentage criteria. It does meet the definition criteria that it should have a significant influence. All right. Now, the carrying amount of the net assets of Grin at 31st March 2026 was 348 million. This is where, this is at your 31st March 2026. The net assets of Grin was 348 million. The increase in the net assets of Grin since acquisition was solely due to profits. Grin has paid no dividend since 31st March 2024. I told you all one thing, if you may remember, that if I want to understand by how much profits the Grin company is growing, I'll have to compare his net worth at two different dates, right? So his net worth at acquisition was 286 and his net worth at 31st March 2026 is 348. So I got this numerical aspect completely, okay? So share in associate profits. So I'll take this in the bracket 348 less 286 into 30%. 18.6. So I got this numerically. Okay, so from this particular sum, what could I extract is numerically the second A2 that they had asked me, which I calculated. They have also asked me to explain. So I'll explain everything now together, that why it's an associate, and I'll also explain this figures. Okay? Yeah. Now, why it's an associate, why it's not a subsidiary. Now, for it to be a subsidiary, you know that for subsidiary, you should have dash over that entity. Can you all tell me what is the keyword? What is the keyword? I should have dashed, or parent should have dash over the entity. Control. Hamad, I'll come to your question. Okay, let me just finish why it's an associate. I'll come to your question. Okay, you should have control. And if you have watched the session, then you know that how control comes. Can you all tell me how control comes? What is the proving factor for control? The entity should have, and I have even given a mnemonic if I'm not wrong for it. Power, ability to exercise the power, and right over variable return, PEA. Absolutely correct. So my requirement is worth of 4 mark. I can quickly use that. It does not have control, because to have control it should have power, ability to exercise the power, and right over the variable return. As of 20x4 31st March 20x4, we do not see proof of such. For it to be an associate, acquisition, the acquired shares should be between 20 to 50%, and that is the case. We see 30%. There's no additional information which says, and it should have significant influence. There's no additional information which it says that it did not have the significant influence. Rather, it confirms that there was no scenario as such which negated its significant influence. So all this is good enough to get your 4 marks. Very easy. Okay, very easy. Now let's say even if you don't do the state part and you directly dive into application, you still, I think, in our position. But a lot of the power, ability to exercise, that still falls, I think, in the state bracket only. So yeah, it's a mix. Okay, why an associate? Okay, so in order, or as per IFRS 3, or let me even not even get into the quoting because it's just 4 marks, right? So um, in order to have control, the entity should have, let me increase the size further because I really hardly have space to form the answers, which will not make sense. Yeah, in order to have control over the entity should have. No, 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 no. Let me go just with. In order for an investee to be a subsidiary, the acquiring entity should have control over the investee. Okay. In order to have control, the investor should have power over the investee, ability to exercise the power, and rights over the variable return. From the scenario, none of the above is visible. However, for an entity to be an associate, investor should have significant influence which can be possible if the investor has 20 to 30%, 20 to 50% voting rights, I might just delete this because I don't know if this all is like going off the place, so off the chart. So in case of Chuckle Company, we can see that it owned 30% shares, and there was additional information which mentioned that there has been no past voting pattern suggesting that Chuckle is not able to show significant influence. Therefore, Chuckle Company is therefore, Grin Company is clearly an associate and not a subsidiary. Okay, so you can very easily identify that there are statements which have very quality elements written. So they're easy 1 mark. This is easy 1 to 1.5 mark because I'm giving all the criteria for why control exists. Here I'm talking about control. So half, 1.5, 2 mark. I'm saying none of them is visible. I'm making a conclusive statement, but it's not a long quality conclusive, just a half part conclusion, right? That it's not a subsidiary. But why it's an associate, I'm not able to prove from you. So maybe this part could be a easily 2 mark and this can be a easily 2 mark. Overall, I'll say this is a little more than 4 mark. This is a 5 mark answer, 4.5 to 5 mark answer. But yeah, this is how you can prove your point. Okay. Now, just 1 second. Just give me a minute, guys. Just give me a minute. Yeah, so sorry guys. Okay, so we're done with the first requirement now. So somebody's asking, is it okay if we quoted the standards or we do it or we do not do it? If you have a lot to write and if you do not quote also, it's still fine because then you're not looking to fetch mark by quoting that standard number or that standard itself. You can get a half mark maximum, right? So let's say if you have enough to write, you're not looking to grab max marks from there. But let's say if you have less to write, then by all means quote the standard so at least you can get that half mark from there. You can at least get the half mark from there. Okay, so you can see that it's a permutation combination thing rather than a fixed rigid framework. It's a permutation combination. For the SEC also, I told you state, apply, conclude. So many times there are so many marks that they can offer that even if you miss one thing, application is one thing you cannot miss by any means. But let's say state part if you miss, okay, then application and conclusion if you do, there's still a lot of bandwidth to get the full mark. Okay, anyway, moving ahead. See, the second requirement was to tell us, was to numerically answer that at 31st March 2026, what is the investment worth? Okay. Now, there was one question by Hamad, I think, who said that, okay, why are we deducting the net worth of 31st March 2026 and 31st March 20x4? Why 2 years? Why not profit of 1 year? This is because, Hamad, associate would keep increasing every year. Your investment in associate would keep increasing every year by the profit it earns. If they asked me the investment in that associate at 31st March 20x5, then you are right. I would take the net worth of the acquisition date and the net worth of 31st March 20x5, only 1 year gap, only 1 year profits. But if they are asking me two dates which are separated by 2 years, then the profits of 2 years is only what we are looking at, no? If we are looking at two dates which are separated by 5 years, then these are the profits of 5 years from which we'll remove 30%. Okay, because associate will keep increasing every year by 30%. So every year's profit, no? Not just 1 year, every year's profit. So Hamad, I hope the question is clear. Mahirakan, all I'm saying is that you need to take the support of state the standard. Like IFRS 3 business combination says this, IS 28 investment and associate says this, because there is associate, there is IFRS 3 business combinations, there is IFRS 10 consolidated financial statements. So there are so many things that you can quote, right? But again, it's just 4 mark requirement. It's just a 4 mark requirement. And whatever the requirement is asking you, there's a lot that you can write about it to get the complete 4 mark. So I might not even write that IFRS 3 states so and so or IS in that case because I know I'm getting the easy 4 mark from the points that I've written because that's a lot, no? You know in your head that you have a lot of points, right? While you're drafting the answer. Sometimes while you're drafting itself, you know that you are going to lack, your points are going to be less. Marks requirement is a lot, points are going to write is less, right? So in that case, of course, put what the standard is, right? But in other case, maybe not required. It's just a 4 mark requirement. I do not want to over invest time. I hope it's clear. Okay, now next. So grin now, remember what the requirement was? Grin was numerically tell and explain it also. Again, 3 marks, they want us to even do the numerical, they want us to explain also. In this case, when I have like this much of calculation to 2 years net worth compared, taking the 30%, taking the cost. This is an easy 1.5 to 2 mark, what I've already done. So even little bit of writing, just to get that 1 mark or 1.5 mark is more than enough. Every time keep an eye on the marks, huh? You can't just go and write and write and write to explain this now. No, just little bit writing is more than enough. You just need to get that 1 to 1.5 mark. That's it. That's it. Okay. So again, I'll just read using explain with how grin should be accounted for. So very quickly, we'll write how it should be accounted for because it's an associate equity accounting and equity accounting means profits will grow year by year. Okay. So, or you want you quote your as per IS 28 investment and associate, don't quote it because like I said, it's just 3 mark. Okay. So associate is accounted using equity accounting method. This means that initially associate will be recorded at cost, and it will keep increasing every year by the share in its profits. Okay. And like I said, because it's just 3 mark, I will take a hard stop here. I have a tendency to write a lot, by the way. I have a tendency to write as per IAS 28, investments in associates. Associate is, accounted using equity method, blah, blah, blah. But I need to take a hard stop. I need to, put those lines so that I don't end up writing for a 3 mark requirement a lot, because there are so many marks that I want to grab in other scenarios. Okay. Now, the next requirement, I will have to just take a 2 minute break because I need to pass a notice to the other group that the class is delayed. Unfortunately, because of the glitches, technical glitches today. Next requirement. Okay, now just one thing. Just before going to the next requirement, like I told, we will parallelly solve. I know numerically over here, what was the mistake that they were recording the green company at cost. They just took care of this part. I need to make sure that it's recorded like an associate, and 18.6 part is also taken care of. So I go to my pre-populated, I scan, and can you see over here that they have written investment in associate 100 million only. Okay. 100 million only. So I put the tagging of first exhibit, or you want, you can put green company, you want, you can put associate, whatever the name of the exhibit you want. And investment in associate, I will write 18.6. What happened? I'll write 18.6 over here. I'll add it. Can you all tell me the other place? This I happen to do it on the asset side of the balance sheet. What is the other adjustment that I'll do it, or do on my pre-populated spreadsheet for this 18.6? Because always my balance sheet should be tallied. So should I deduct some 18.6 from the asset side, some other parallel, or something on the equity liability side I should be doing? Yes, you will add this to your group retained earnings 18.6 quickly. So you saw such easy 2 marks you grabbed, such easy 2 marks you grabbed instead of like revisiting the scenario at the end. You just done and dusted. Got you're done with your requirement A completely front to end. Okay. Now, next one. Using Exhibit 2, briefly explain why the classification of Chuckle's investment in Grin should change to a subsidiary after the purchase of additional 18% shares. They are saying that briefly explain why the classification of Chuckle's investment in Grin should change to subsidiary after buying 18% shares. As far as we remember from our memory, only 30% of Grin it had, and now they're saying 18% purchase, and it's only 48% right now. And they're asking us to prove that it's changed to subsidiary. They're not asking us to make a judgment. No, explain why it should change to subsidiary. Why? Again, don't use your brains. Ball is not in your court. You don't have to decide whether it's an associate or subsidiary. They're saying it's changed to subsidiary. Prove it. Why it's changed to subsidiary. Okay. So normally a 48%. Normally a 48%. Does it mean subsidiary? Yes or no? Normally. No, it doesn't. But we told you SBR is not simple. You have to look at the additional information and look for extra points that other than percentage, what does it tell you about the scenario that makes you prove that yeah, it's maybe still a subsidiary, right? So yeah, now you have to look at the additional information and be able to prove. So someone is asking, will the session get uploaded? Yes, the session will get uploaded and will be freely uploaded on the YouTube as well for everyone. So I'll read this exhibit 2 now. Sorry, I'll read this exhibit 2 to understand why it changed, and maybe let's see if there is any other requirement with B2 where I can still do some numerical, right? Using exhibit 2, briefly explain how the additional purchase of 18% shares in Grin should be accounted for in the consolidated financial statements of the group. This is also again briefly explained, no numbers. So I don't think from exhibit 2 there's anything I can play with numbers, it's just words. Okay, it's just words. Now, let's read. What is that additional information? At 31st March 2026, Chuckle acquired a further 18% of Grin's equity shares. So at this point, they have now 30 plus 18, which is 48%. Okay. Next, the remaining 52% of the equity shares of Grin at 31st March 2026 is owned by a few other investors, none of which own more than 10% of the equity shares of Grin. So there's no other investor who has 51% or more, no other investor. Because they clearly are saying that they are all fragmented investors with 10, not no one having 10% or more, right? This is the case. Now you are the only one who has like 48%, less others are no one more than 10%. On 31st March 2026, Chuckle also acquired some share options. On this same date, he also acquired some share options in Grin exercisable anytime until 1st April 2027. So, till the next full 1 year, you can exercise this. The exercise price of the options at 31st March 20X was just above, not a lot high, just above the market price of Grin's equity shares. Grin has been profitable for a number of years and the share price has been an upward trend which is expected to continue. Right now at 31st March, whatever is your exercise price is very little above the market price, and the trend of Grin is that it's always had an upward trend for the market price. Chuckle would increase its ownership to 60% should it exercise its right. Today at 31st March 2026, does it have the right to exercise those shares, yes or no? Can it exercise the share options and come to, from 48% it can come to 68%? Does it have the option? Is it in his hands? Is it an option available to Chuckle? Yes, it's an option available to Chuckle. And from the way the company is growing, do you think it is something that Chuckle will exercise? Yes or no? The way company is growing, do you think Chuckle will exercise? Yes or no? So it's a highly exercisable scenario. Highly exercisable scenario. It is believed that there would be additional cost savings should the additional equity shares be acquired, as decisions at the board level could be made more efficiently. So there are so many points over here, every point over here is helping you just prove that yeah, it's actually a subsidiary, every point here. Okay, so first it's 48%, but when you look at additional information, it has highly exercisable share options. With it will become 60%. The remaining shareholders are all fragmented owners. None of them has 10% or more. When this happens, there'll be synergy benefit, there'll be cost savings. All this is pointing towards at 31st March 2026, it was a subsidiary. I'm so sorry. I don't know that. Choking in the throat. Okay, so we'll form the answer because it's just 3 mark. Again, do not overinvest time. At 31st March 20x6, Chuckle acquired 18% more shares, which means in total it had 48% shares. However, the remaining shares were fragmented and none of the owners had more than 10% shares, making Chuckle majority shareholder by huge margin, not by small margin, by huge margin. At this date, Chuckle also had share options, which, if exercised, will make the shares ownership to 60%. As the market price of shares is slightly or as the exercise price is slightly higher than market price and it is a company with increasing market price trend, these shares are highly exercisable. There are also synergies, that is cost benefits on acquisition. Therefore, it means that at 31st March 20x6, Green Company was already an associate or had become an associate.
Sorry, ma'am,
So I
subsidiary
don't,
you
sorry,
mean?
a subsidiary. So I don't think proving was at all difficult for 3 marks because again, there were so many points to pick. More than 3 points, can you see easily to pick? More than 3 points easily to pick. So I don't think so. It was challenging at all.
Ma'am, can you tell me in the fourth point you have said exercise price is slightly higher than the market price, so means market price is of
By the way, till now I did not
$100.
hear anybody talking and I'm getting a notification not hearing anything. So let me, I think there was some issue with the speaker or I don't know if it was on mute or what. If someone spoke something, apologies. Just read the notification. No. Carolina is asking if we just consider the fact that they acquired 18% shares only. Just this fact. Just this fact itself makes it a subsidiary, yes or no, guys? Can we answer Carolina? Just the fact that acquiring 18% shares with no additional information. No, of course not. No, dear. There's every additional information pointing that yes, it was subsidiary. Only that's why we're able to say this, okay? For no other reasons. Now, the next requirement was just very tiny 2 marker requirement that using exhibit to explain briefly how the additional purchase of 18% shares should be accounted. Now that we have already proved that at this date, from an associate, it became a subsidiary, then can you all tell me what situation is this? You all have just learned last week change in group structure. So, what is this situation, guys? It had no control and it got control. So, what is this situation called? It's called step. Jalo is correct. It's called step acquisition or it's called no control to control situation. So we can talk about this, that how it's supposed to be accounted for. Okay. As Chuckle Company has moved from no control to control situation, this is a step acquisition. It means that GRIN will be consolidated like a subsidiary where PL and balance sheet of GRIN will be added line by line. Equity of GRIN on consolidation will be eliminated. Goodwill and NCI will be added for this subsidiary will be added. At acquisition date, fair value of existing shares, purchase consideration, and NCI will be compared. Sorry, purchase consideration minus the net worth. Yeah, purchase consideration and fair value of NCI will be compared with net worth to find goodwill. Again, what I wrote is more than what is required for 2 mark. But yeah, again, on the safer side, every time one point extra, 2 point extra is no harm. Okay, now next. Using exhibit 2, sorry, no, not the B2. Now we're going to C. Okay, so we're going to the C requirement. There was nothing that from B1 and B2 I could parallelly do in requirement C, guys. There was nothing that I could do parallelly. So I'm going to go to requirement C now directly. Using Exhibit 3, explain with calculations how the fair value of GRIN's non-current and current assets should be measured on 31st March 2026, including any deferred tax adjustments. Okay, including any DTA adjustments. Okay, let's go to Exhibit 3 now. And explain with calculations how the fair value of NCA and current assets should be calculated. Now, when you read requirement 3, exhibit 3, maybe you will not just end up catering requirement C, but for any mistakes that they tell, oh, this is a problem that they have done, you can also calculate for that so that in the pre-populated, now you can take care of everything. Okay. Chuckle has equity interest in several companies. Goodwill relating to companies other than Grin has been impaired. The directors of Chuckle have prepared a draft consolidated statement of financial position as at 31st March 20x6. A draft statement at 31st March 20x6 classic scenario. The investments in Grin have been stated at cost 100 million and 66 million. And the net assets of Grin has been included at their carrying value from the individual financial statements. Look at the statement, okay? We'll read it again. The investments in Grin have been stated at their cost 100 million and 66 million. Come to the pre-populated, go check the asset side. Can you see investment in associate as 100 million and further investment in associate as 66 million? They have taken it in this fashion. Okay. But to tell me one thing, that from associate, if it moves to a subsidiary, do we even keep this as an investment in the balance sheet? This 166, are we going to even keep this in the balance sheet? No, we're not. Investments should be removed. Investment in the subsidiary should be removed. So the moment you read this piece of information, you can actually remove this 100 million, and not just this 100 million, because that 100 million had become an associate and you had started doing equity accounting. So not just 100, it also had 18.6 as per exhibit 1. So you can actually remove 118.6 And you can also remove the step acquisition. At the point of step acquisition, you have given 66. You can remove that also. Okay, you can remove both because it's wrong or incorrect to retain this once it's become your subsidiary. You know the first rule of subsidiary, cancel investment in subsidiary. So the moment I see that, okay, it's retained at cost, whatever it is, whatever amounts are this, I'm going to eliminate. Just to eliminate this over here, easy 3 mark I must have gotten. Easy 3 mark. Okay. 3 elements I've eliminated, I must have gotten it. Now, and they're saying, and the net assets of Grin has been included at their carrying amounts from the individual financial statements. Can you all tell me when you're acquiring subsidiary, do you keep the net assets at cost or you check the fair value of each item in the market? Do you keep them at the carrying value, book value, or do you fetch the fair value from the market? You check the fair value. So second statement also indicates they could have gone wrong there. Okay. Now next. The equity of Grin has also been included as a balancing figure. Goodwill has not been calculated. Each statement, there is so much that you can go and correct. The equity of Grin has also been included as a balancing figure. Is it correct to include subsidiaries' equity? Is this some approach that you do when you take over subsidiary? You you record the subsidiary's equity? No. Can you very clearly see over here in the pre-populated Grin's equity? They have put a line item. So in order to correct it, what you have to do? Simply eliminate. Okay, simply eliminate. So I'm going to eliminate 348. Okay, while I was reading this, I eliminated the 348 because I understood that's a problem. Now, next. The equity of Grin has also been included as a balancing figure. Goodwill has not been calculated. When from an associate, it went and it became a subsidiary, did it require from us that we go and calculate goodwill? Yes or no? At the time of step acquisition, should we calculate or not calculate? Yes, you should have. So clearly this is a mistake. So the moment they tell me this, I can start making my working for goodwill so that I can go and incorporate it. Okay. So goodwill for step acquisition. Okay. So how much are you paying to acquire the further investment that and the fair value of existing investment? Just 1 second, guys. Sorry, guys. Okay. So now we are doing the goodwill for step acquisition. So see what all we have to compare. Okay. Now let's think what all we have to compare. One is we are acquiring some percentage. How much percentage are we acquiring? 18 percentage. But even before that, how much percentage existing we had? Existing, how much percentage we had? Can you all tell me? I'm helping you all derive the formula rather than just putting things in memory and then trying to bring it from there. I'm helping you all derive the formula. Y'all are not able to see anything? Okay. Yeah. Existing we had 30%. Then how much more did we acquire? How much more did we acquire? 18%. So if I end up comparing this 30% plus 18%, 48%, and from this, if I try to remove the 100% net worth of subsidiary, I'm not doing a like to like comparison. I'm comparing 48 and 100. That's wrong. Can you all recall from memory and tell me that how to make this correct? How to make this 100%? How to make this 100%? Absolutely correct. So that remaining 52%, no, is your NCI. So now you do a 100% comparison, you will get the correct goodwill. You will get the correct goodwill. Okay. So 30%. Okay. So fair value of existing investment. See, the nomenclature can be anything. Your fair value of existing investment, uh, investments, current investments worth, or something like that, just for the examiner to understand what line items you are taking. Okay, what line items you are taking. Now, fair value of existing investment, can you all tell me that it was like a associate for me? It was like an associate for me. Okay. So, how much did you calculate that associate for up until date? If you may recall from memory, how much did we calculate it for? 100 plus 18.6. Up until the first exhibit, for me, that 30% worth was 118.6, right? So yeah, I'll just put 118.6. This might not be a fair value because this is the carrying value, the cost of investment plus profits, cost of investment plus profits. So at this point, I'll break this part. I'll break this part. 30%, it's not fair value, maybe it's carrying value. Okay. And how will I come to fair value? By adding the increase or decrease to the fair value. Add or less, increase or decrease in existing investment. So there are two ways I can present this piece of information. Now, if they give me the fair value, that difference I can punch here and I can say this is the increase or decrease. Okay. Or I can in just one line take the fair value and I can have the total one fair value. It's up to you. It's up to you. But I'm just putting a placeholder right now. Okay. This together will make the 30%. Okay. I'm just putting a placeholder. Let's read further. Let's read further. Now, 18%, that 18% that you acquired further, you don't know till now how much you paid. So let's read further to understand all this. 52% NCI, I don't know how much the worth is. Less how much total net worth to remove, I don't know all this right now. So let's read further. The consideration for the further 18% of the equity shares of GRIN on 31st March 2026 is included in the draft consolidated statement of financial position at the cash amount of 66 million. The same figure that we went and we bothered to cancel, right? So, fair value of further consideration or purchase consideration, anything as a nomenclature that you want to point here, right here, which will indicate the additional 18% purchase. It's okay. Anything, okay? But that nomenclature has to make sense that what you're putting over here is indicating the additional 18% purchased and the fair value of that, okay? So fair value further consideration is 66. Now, the fair value of the original 30% equity interest was 127 million at 31st March 20x6. The fair value of the original 30%, which means this has become 127. So if I do a 127 compared with 118, do you think that there is an increase in the existing investment or a decrease? There's an increase or a decrease? Quickly, guys. There's an increase. There is an increase. There is an increase. Now, for the 52%, okay. So now you guys already judged that it needs to be an increase and this is a gain element. Now, the way they are accounting for this associate in their books is that they were just keeping it at cost 160. If you may remember, if I go back to my pre-populated, they had just accounted for it as 100 and a 66, which means that at the date of the further acquisition, they never even accounted for this gain part 8.4. Now, you all think and tell me that should you as a step first make sure that this 8.4 increase is also there or not? Should you do this correction 8.4 that okay, there was an increase? Yes or no? Should you do this? Yes or no? Yes, you should. Yes, you should. So first, let's go and also adjust for this increase. Okay. So in my second exhibit, I would want to break this because now second exhibit is not just just one step for me. So what I'll do is increase in carrying value of associate. So that is how much? That is from my exhibit 3 coming up to 8.4. So I'll do an increase of 8.4. Now this increase in associate 8.4, if you see the sum, it's becoming 127. The fair value that they gave me, no? 127. It's summing up to that only. This 8.4 increase I'm just doing at the asset side. What is the parallel impact? Where do I go and pass the parallel impact? Because this will just take care of one side, the debit leg. What is the credit leg? How will my balance sheet tally? Retain earning. Yes. Your associate is increasing in value, go increase your retain earnings also. So at every step, if you may realize that your balance sheet is tallying. Why and how it came to 8.4, Ram is asking. Ram, in Exhibit 3, they told us that the value of this fair value of this investment is 127. If the fair value is 127 and the carrying value in the books was 118, then you compare it, the gain is 8.4, no, for that existing shares. It's 8.4. If you have read change in group structure, if you all have read change in group structure, you all will know that you will have to, at the date of step acquisition, check the fair value of existing investment and incorporate the increase or decrease. Of course, if one leg is debit increase in that investment, what is the credit leg? It's like a gain for you, no? You will have to take that gain in the retained earnings. Is this clear with everyone? That why I'm taking the 8.4 to the retained earnings, Mahirakant? Debit leg is the investment. Credit is what? My investments can't just increase simply, no. They are going to be routed via P&L. Okay, Ram is asking, yes, he got this, but his doubt is that 18.6 profit, do you all remember this profit? He's saying that also came from 31st March 26. Then this gain is also coming from 31st March 26. How is this possible? So, Ram, there is a difference. The 18.6 gain that we got, the 18.6 we got from comparing the associates' net worth at two dates. And when we are playing with the net worth and when we are doing equity accounting, we're still sticking to cost per se. It means it's the carrying value of that associate in our books, not the fair value. Naturally, what associate is increasing by the profit element, we are recording it only at that. And this 118.6 is the carrying value of the associates in the books. The fair value in the market can still be something else. And that 127 is the fair value of that associate of same date. So 31st March 2026, as per this question, you have two valuations now. A carrying value and fair value of market. Perfect. Now, my throat has been parched once again. Okay. Now, anyway, let's go further. Let's go further. Let's read the exhibit more. The fair value of the original 30% equity was so and so. Okay, now let's read the carrying amount story. Okay, what happened with the carrying amounts? The carrying amounts of the net assets of Grin on 31st March 2026 were as follows. Can you see the non-current assets? It's 355, current assets 214, deferred tax liability 16, current liabilities 300 and 205, and total is 348. Now, what light are they throwing on the fair value? Included within the non-current assets is some land. The carrying amount of this land at 31st March 2026 in Grin's individual financial statements was 50 million, but its fair value was assessed to be 60 million at this date. So you all know that when you're going to deduct the net worth, this 100% deduction when you're going to do less the net assets of Grin, you know that you have to incorporate for the fair values, okay? So whatever is the carrying value, keeping that in mind, I'll have to make changes. So there is a change on the land part. So fair value increase in land. So take this fair value increase in land. How much is this? 10. So take 10 and keep all these workings in the outer column. Next. Current assets include finished goods with a cost of 84 million. What are your current assets right now? Okay, current assets includes goods worth 84 million and the fair value of these goods were 131 million. So again, there is an increase in inventory. So fair value increase in inventory. How much is the inventory increasing by? 131 less 84 by 47 million. Now, further, what does it say? It says on 31st March 20x6, the directors of the Chuckle also identified that Grin had an internally generated database of customers who were likely to be interested in purchasing their products. Although there were no contractual or legal rights associated with this database, a professional expert has estimated that competitors of Grin would be prepared to pay 5 million for this database. Grin did not recognize this database as an asset in its individual financial statements. See, Grin not recording this in his individual financial statements is correct because as per IAS 38 intangible assets, it should not even record internally generated intangible assets like customer list and all of that. But what about when other entities acquiring this? In that case, he should, right? In that case, he should. So add fair value of database as 5 million. Now they're saying so if there is an increase in the net worth of 62 million, then this will also attract a deferred tax liability. You are increasing the worth of the assets. So this will attract a deferred tax liability. Okay. So the current rate of tax is 20%. The tax base of assets and liabilities is determined based on the carrying amounts in individual financial statements. Okay. So I will use this tax rates to find the DTL, the deferred tax liability. So you all have watched the deferred tax chapter. You all have watched now change in group structure. So you should know that this will attract my DTL. So whatever it is, the sum is again we'll read 62%. So 20% of 62. But this is a negative item for me. Therefore, tax liability will drop my net worth. So this, and they said the carrying value was a 348. So this. Okay. Now, Chuckle Company, the final statement. Chuckle Company measures the non-controlling interest at acquisition at its proportionate share of the fair value of subsidiaries' identifiable assets. It's a proportionate method. Not a fair value method, it's a proportionate method. So for me to find the NCI now is very easy. This NCI, the non-controlling interest, is nothing but 52% of 397.6. Okay. So this is going to come to this into, no, rather I'll have to give a negative sign and into 0.2%. So 79.52. So my goodwill is coming up to, okay, there's of course something that we have not taken. I have taken carrying value of investment as 118.6 plus increase or decrease. The further acquisition, the net assets of Grin, we have taken it as a 397. The NCI is not coming correctly. Sorry, the NCI is supposed to be 52, and by mistake, when I typed it as 2. So it's catching it as 20%, not 52. So that's why it was not coming correctly. So when I do this correctly, I have a positive goodwill coming to 2.152 million. Okay, I have a positive goodwill coming to 2.152 million. Now, I did make sure that in my pre-populated, because everything was recorded at cost only 106. If you saw one line item, 100 for that investment and one line item, 66, right? So I made sure to correct it. So I added that 18.6. Then we saw that it increased by the fair value because of the fair value. So that 8.4 also we took into consideration. Now, you know that we are trying to do everything parallel in the pre-populated. So you know that when I've added all these shares properly, I know that because they kept saying the statement that it's included at a cost, and you know that from an associate it became a subsidiary. So as per subsidiary rules, nothing should be there. So at this point, I'll eliminate everything. Can you see? I've eliminated everything. At this point, I'll eliminate everything. I eliminated everything. Okay. Now, so this part is taken care of. They did not take care of this part. I took care of this part. You want, I'll color code this in my pre-populated. The fair value further acquisition, this also we took care of. How? We eliminated it, and that's how we took care of it. Okay. Then the NCI 206.752, we did not take care of this. We'll go and do this. So come to your equity side, do the NCI. Here is your NCI. So we'll take the NCI. How much are they saying? 206.75. We will give a linkage. Okay. So this is also done. The net assets of Grin. So from net assets of Grin, you just have to take care of the increase part. Okay, this is the increase part and that liability that they did not take care of. So go to your pre-populated, go to your property, plant and equipment, add the increase of land, intangible assets, that 5 million database, add. In the current assets for the inventory, how much increase is there? 47. Go add. Okay, so one by one, I'm trying to take care of everything because I know all this is something that they did not take care of. So one by one, I'm taking care of everything. I took care of this. DTL, deferred tax liability, go add. Deferred tax liability, I'll link it maybe, but it's not supposed to be negative in this balance sheet right now. So I'll just remove the negative sign. Okay. Now, goodwill itself, I have to take into consideration. So where is my goodwill? Here, go add. Okay. Pretty much as per me, we have taken care of everything. But let's say I'll do a check if it's tallying or not. Let's say if it's still not tallying, then we will try to identify. If you're not easily getting it, then we'll quickly make a journal entry to reverse the wrong, put the right. Quickly, a journal entry, debit credits. Okay. The moment we have journal entry, we'll see every item of journal entry if it's reflecting in a pre-populated or not. The missing element will tally our balance sheet. The missing element will tally our balance sheet. But right now, why I'm not making journal entry? Because let's say just by looking at this line by line item, if you're able to plot it and pre-populate it, and if you already have everything taken care of, why to bother to even do a journal entry, right? So I'm just trying to save time. Journal entry is not being asked. Journal entry just makes things, gives you a completion check. Okay, it gives you a completion check. So I will use that completion check if everything right now over here, what they have wrongly done, after plotting, if it's still not tallying, only then I'll use that completion check. Otherwise, I need not use that completion check, no? Okay, so now I'll just see how much is it. It's coming as 128.84. And this is also coming as 128.84. It's absolutely tallying. In this case, I need not bother to do a journal entry check because they don't ask me. Journal entry check is for my satisfaction if all debit and credit legs are being posted correctly or not. If that is being taken care directly in the pre-populated first shot, why to do it? Why to waste time? No need to waste time. Absolutely right, Isra. Isra is saying, but does it really have to balance? Can we not just move on in case we don't have time? See, if it does not tally, then definitely it means that some error is there, some error. But it could be a half mark, 1 mark error. Okay, it could be even a 2 or 3 mark error. You know how much confident you are about plotting and about finding the answers. You know that, okay, there was something that is not correct. If you have some time, try to identify that mistake. If you're not able to identify, don't give it a lot of time. 2 to 3 minutes, try to identify. And if you have short time, then of course move on. Of course, if you have ample of time, then yeah, give 5 minutes to crack it and identify where is that missing figure, what you can plot and get that mark. Okay, but don't give for sure. If it's less time, then don't give a lot of time. No need. You can skip double entries. Double entries is like a check, I said. Like I said, if right now, if it was not telling 128.84, 128, and I have a lot of time, like Isra is saying, if we don't have time, don't. But let's say I have a lot of time. I'll quickly do a journal entry and I'll quickly try to reverse all the wrongs, debits, credits, put whatever is missing, the debits, credits, and plot that on the pre-populated. Anything missing will help me tally my balance sheet. Okay, that's the approach. So, yeah, with this, we come to an end. You can have a total column here. If you don't want, don't have it because literally this total column is not fetching you a single mark. Okay, so I'm not wasting time right now. The requirement D was 12 mark. By doing this, you will absolutely get your 12 mark. Nothing else required. You will absolutely get your 12 mark. But requirement C asked you with calculations how the fair value of non-current and current assets should be measured. So in exhibit 3, when you did this, you took care of the fair value part. Okay, you took care of it. But they need explanation around this. So you have to put this in words. You have to put this in words that at the date of, as per IFRS 3 business combinations, the you have to incorporate the fair value at the acquisition date, and not just and all the carrying values. So as per the scenario, there is an increase in fair value of land 10 million, increase the PP in the balance sheet, and it will have a corresponding effect to the goodwill. The goodwill as a result will decrease, right? See, increase in this is resulting to a decrease in goodwill because my net assets are increasing. So speak in that fashion. Keep writing one statement. There's an increase in inventory. So this will lead to an increase in inventory in the balance sheet, and again will drop the goodwill. The same goes for database. Will increase my worth at acquisition date and will drop my goodwill. This all will attract a deferred tax liability of negative 12.4. So this is all you have to write. The calculation is right here. This is all you have to write. These three, four, one statement for each of these item. You're done. But I can't put more time right now for this, unfortunately, to just develop that small written part for this requirement, because I have a next class already. I have delayed it. So by 35 minutes, I've delayed it. So I can't delay it further. So yeah, but in wholly, this is your sum and this is your approach. Main part is this is your approach. So Cynthia, you will have, when you join the portal, the approach to join the WhatsApp group also, right? The link to join the WhatsApp group, rather. Okay. Fine, guys. I'll have to take. Yeah, it's a big question, but yeah, of course, I want to show front to end approach. Okay, guys, I'll have to. Yeah, I'll share this on the group right now. I'll have to take a hard stop. Like I said, I have a second session, so I'll have to take a hard stop. I just want to like breathe for 5 minutes, take some water. So yeah, guys, thank you. And this coming week, cash flows is there, and joint venture is there. So a lot of focus there. Do all the consolidation question practice. Next week again a 30-mark question practice. Next week again a 30-mark question practice. Okay. Thank you everyone. Bye bye.